So we are gonna talk about business combination, and it has been tested twice in CFE. Is in Common Rule Section D2. So every candidate should answer about this assessment opportunity, and it's very gigantic one. It's very big, lots of points for you to discuss. And it's a complicated one, hard to get and competent level. The first time it was tested in 2018. Solar panel solutions. Second time it was tested in 2024 September, Inspired Books Ltd. And actually, these two are both business combination question, but it is actually structured, like the case facts are structured in different ways. In solar panel solutions, the method of business combination is through acquisition of net assets. But Inspired Books Limited, the format of business acquisition is through acquired of shares. So can you all actually distinguish between these two? I'll say, let's first go through the structure. There are two different kinds of activities within the company. One type is called investing activity. Another type is called financing activity. So financing activity is when we need money. As a company, we need money and we have to go find money. So we can borrow money from somebody else. That's called debt financing. And we can also issue shares and recruit more shareholders. That's called equity financing. So financing activities are not what we are talking about today. Today, we are talking about investing activities. Investing activities means we have money and we want to invest our money into something else. And there are three different types of investing activities. Oh, wait a second, sorry. Let me first categorize investing activity into two types, passive investment and strategic investment. What is passive investment? Passive investment is just we have idle cash set aside and we just want to invest something. We don't want to put it in a checking account because there's no interest income in the checking account. We don't want to put it in GIC or like savings account either because the interest rate is too low. We want to invest the money so that we can get, because the companies think they are not going to use this money in very short term, so they want to invest this money and then just get back some of the return, right? Put the idle cash into best use. So it is passive investment. There's no strategic consideration in this passive investment. Usually, if you are buying shares, if it's a passive investment, then the ownership of the subsidiary company is less than 20%. Okay, that's called passive investment. And there's another type of investment. It's called strategic investment. It is not just try to get a little bit of investment income out of the idle cash. We are making a strategic decision to invest into some other companies or some of their business. That's called strategic investment. Making sense? All good? Okay, you can stop me anytime if you have any question. So for the strategic investment, there are two types of strategic investment. One is acquired of net assets. That's what has been tested in the solar panel solutions. What about acquired net assets? So see, I'm company A, I'm company solar panel solutions, and there's another company right across the street, or there's another company with similar in similar industry. But that company, maybe the owner is retiring or something. So they are selling their business, but they don't want to sell, but we don't want to acquire the shares of that company. We just want to acquire all the net assets, and we are going to keep the business going. So we are going to retain the employees of the company. So that's acquisition of a business through acquisition of net assets. So you basically just acquire all the net assets, and you also assume you basically just acquire all the assets of that company, and then you assume all the debts of that company. Then that company may dissolve after. It is not your subsidiary because after you acquire all the net assets of the company has nothing to do with you. It is not your subsidiary. You just acquire the net assets, not the shares. That company has nothing to do with you. It may just dissolve. You know what I mean? And then those net assets belong to you. That is your company's net assets right now because you just acquired it. Okay, that's business combination by way of acquiring net assets. Now, what happened in Inspired Books Limited? That's acquire of shares. So if you acquire an associate or subsidiary, then that's called you acquire shares. That company still exists as a separate legal entity. So you are this company. For example, in our case, we are IBL. We are Inspired Books Limited, and we acquired shares of another company. So the two companies both exist as separate legal entities and separate tax entities. This is one entity. This is another entity, and this is the parent company. This is the sub. Okay, so this is called strategic investment.